Hello and welcome to Bloke in a Pub as the zombie apocalypse descends upon us. And this episode is brought to us by viral hysteria, which is a thinly veiled reference to a beer pun associated with the coronavirus about which we need to speak. Now, unless you've been living in a cave, which we might all end up doing, you've doubtless been following the news about the outbreak of the coronavirus, and you've probably also seen that investment markets have had a slightly hysterical reaction to it, and markets have come off a bit in the last couple of days. So what's going on? So what's the coronavirus? Well, it's one of a number of pathogens that's related to nothing other than the common cold. The latest mutation of that virus is believed to have appeared in a part of China as a result of transmission from animals to humans in what are called wet markets. And what's a wet market? A wet market is where you go and buy your lunch still alive. And the problem with that is it might bite you. Why would you buy your lunch still alive? Well, if you didn't have a fridge, then you want your food to stay fresh, then you take it home alive and you kill it when you get home, making no pretense to be an animal lover beyond the fact you enjoy eating them. What does it mean if you catch the coronavirus? Well, for most people, it means nothing more than a fairly mild cold. But in common with many other illnesses, like influenza, which kills about 400,000 people a year, if you're immune compromised, if you're old, if you're frail, or if you've got a pre-existing respiratory condition, then it can become serious. But it's no more or less serious than influenza. The first reason is that if your workforce becomes sick or becomes quarantined, then they can't turn up to work, make goods, fulfill orders and make profits. And so your profit forecast goes down, an effect on trade, basically. On the other side of the demand and supply equation is if shoppers are a bit wary of mingling with crowds in shopping centres, and I don't blame them for that anyway, and you might spend less, you might be less economically active. You might also be buying into the media hysteria surrounding this mysterious coronavirus that nobody tells you on Sky News is basically just a bad cold, and not travelling internationally, and therefore reducing the profits to the very lucrative tourism industry. So there are reasons why on both sides of supply and demand that you could see there could be an economic impact of this illness and its containment that could spin into share prices and dividends, and therefore the value of markets. The worry that's been propounded by the media in a totally unbiased and indifferent way, of course, is that this could lead to a pandemic. The worry about a pandemic is that, of course, if vast swathes of your population become unwell, then public services and infrastructure may also suffer in addition to the supply and demand side of your economy, which could lead to broader disruption and cost to your economy. But we haven't reached that point just yet. The reality is that coronavirus is a fairly contagious but otherwise mild form of a cold that if you are already unwell or frail, could be problematic for you, but it's in that way not different from many other illnesses. What it is a fantastic bad news story for TV stations for whom there is not 24-hour news, which is whipping up into, as I say, the aptly named viral hysteria. What we've seen over the last decade or so is the growing influence of investor sentiment driven by news feeds. And we saw this last time, in fact, also associated with China, was the overheating of the Chinese stock market. What you saw there was the likes of news outlets describing something that was a perfectly normal event as a crisis or a catastrophe. And in reality, markets just underperformed, overshot, and then reverted to mean. And that's what always happens in these circumstances, and it's likely to happen here again. In the meantime, what should you do about it? Well, if you're not investing in the long term anyway, you probably shouldn't be in asset-backed investments. But if you are, then the best advice is to take a rational, long-term approach to buy and to hold and to not do anything particularly dramatic with your money, just to ride it out. Over the last 2 years in response to a slowing global economy. We've been building greater resilience into the portfolio anyway. And this is where either non-correlated or alternative assets really come into their own. So when equity markets suffer, the money runs away and looks for a safe haven. That's pushed the price of the gilt holdings. These are loans to the British government. They have gone up in response, and it tends to counterbalance it. Also, assets like property, which behave virtually independent of equities and gilt, now really come into their own in stabilising a portfolio. So while it doesn't avoid the problem or quarantine you completely from it, what it does is it smooths the ride for you. But ultimately, best thing to do is just to ride it out on the basis that in the longer term, this will recover, just as every epidemic has done in the past. So summing up, where are we? Coronavirus, fantastic news story, fantastic for whipping people up into a frenzy, and doesn't look quite so dramatic when you just say it's actually the cold.